Michael, it's 6 months since you joined azValor in London. What attracted you to the company in the first instance?
My deep respect and long-standing friendship with Alvaro and Fernando. I think that they are incredible captains of the business, and as the fraternity of value investors has whittled somewhat in recent years, it was great to partner with two individuals who have such a strong, deep value approach to investing, one that resonates with me and one that I admire.
And value obviously is a technique that you liked. When did you become a disciple of value investing?
I began investing in about over 15 years ago, and in all my incarnations and businesses where I've worked, it's always been about finding securities that are deeply undervalued, which in my view creates a margin of safety, and investing or underwriting with a view to creating a lot of asymmetry and optionality. But in that regard, what you do is create the most amount of payoff for the least amount of upfront premium spent. And in a world where there's many opportunities of that ilk, but many of them are overlooked, particularly due to lack of research, it seems to me like a very good time to start working on that in Europe with these two great guys.
You're an American?
Yes.
I believe, or you grew up in America? Is that right?
I grew up in France.
Right.
I matriculated in college in the States.
Okay.
And so, broadly, prior to my move to London 10 years ago, I spent about half my life in the States and half my life in Europe.
Okay. So in terms of your asset management career, was that mainly half in the States and half in Europe, or primarily in London?
I began working in Boston for a value investment shop that was almost a spin out of the Baupost Group. Then moved on to work at two great shops in New York, and then moved to London in 2009. And subsequently opened up my own value investment firm, and then subsequent to that, joined azValor.
Fantastic. As far as London is concerned, obviously, to many of us on the British side of the equation, it's perhaps the biggest asset management centre in the world, arguably. As far as you're concerned, what do you think opening the London office offers for azValor?
I think London has a lot of foot traffic from firms that visit the city from all over the world, perhaps more so than other major cities.
And these are the companies that you're looking to invest in?
Yeah, absolutely. In addition, London harbors, as you say, a big financial industry, and associated with that, a lot of silos, such as political silos, journalistic silos, legal silos. And I think as we marshal our forces to find select opportunities in which to invest, it's easier to do it from London, because you already have, if you will, a network effect or a critical mass of people involved in investing in that specific city.
I know that you've already started work. Obviously, you've been there 6 months, as I said earlier. The guys have been over from here in Madrid into London. Do you think what's their reaction to having that base? And how it's working?
It's been great. We've had a lot of visitations from analysts as well as portfolio managers to London, where they stay for stints ranging from 2 to 4 weeks. When they're there, what we try to do is organize meetings about companies that where we're already invested, or areas and industries that we're investigating with some vigor. We try to make it holistic by bringing in lots of different facets of investing to augment the process. By and large, I think it's been a success so far.
And in terms of seeing companies, have been any surprises or things that you perhaps may have not come across had you been only in Madrid?
Well, we try to channel our efforts towards securities which are undervalued and out of favor. And so I guess probably against common consensus thinking, what we try to do is meet with companies that no one wants to meet with, because usually those are orphaned and to some extent overlooked or misunderstood by the market.
Sure.
We also try to find, I would say, primary avenues of research which are overlooked. So by that I mean not necessarily reading the annual report or reading broker research, just going a little bit further. For example, investing conferences, industry events, or literally putting the hard hat on and going and visiting the companies in their mines or in their refinery build-outs. In other words, it's kind of walking that extra mile, and I think London gives us a good avenue to doing that.
One of the things that your colleagues talk about quite a bit is the concept of permanent capital. I wasn't quite sure what they meant by that. How would you describe permanent capital in the context of the conversation you have with your colleagues? I
think a unifying theme that we often speak about in terms of how to build out in the architecture of azValor is to do with this notion that the quality of capital endows you with certain abilities. I think a lot of value investors perhaps aren't able to actually underwrite securities that have high volatility, for example, because they're for fear of their capital walking away. Or I think azValor really high grades having customer relationships or client relationships where you have duration as your, if you will, your ability to look at opportunities that other ones cannot. So effectively, it's almost a core competency and a differentiating factor.
So it's to achieve that, you need to have an educated client base who understand what it is to survive downturns in stock markets,
Quite
as well
right.
as the upturns.
Absolutely. You need to have clients who understand that volatility is not risk, and often securities that are sold mercilessly are actually great opportunities to express conviction, and that conviction is formed by way of assiduous primary research, which allows you to actually behave in a way that's contrary to what everyone else is doing at moments of radical upheaval.
Yeah, sure.
I think that the communications apparatus in this firm is really exceptional. And the proof in the pudding, if you will, is that a lot of clients invested in the business when it had an early day drawdown, which ended up being the right thing to do.
Yeah.
And so there's a positive selection bias in terms of investors that come in and that's part of the mettle of this firm, and I think as, again, a big differentiating factor. Research,
you mentioned, is really important, of course, and London is bringing that perspective to the research that was already done. It's broadening it out, I guess.
I think so, yeah. London has a plethora of different conferences one can attend on any given day. There's a lot of trade events and global, if you will, thought leaders coming and congregating in that city. Additionally, I think the reality is that a lot of the investments that we focus on are kind of English nature, or Anglo-Saxon, I guess, in heritage, and may have listings in the UK. And so having access to chairmen or CEOs quite quickly is a big arrow in the quiver.
Yes, it's perhaps not understood that the headquarters of many large corporates, in fact, most large corporates, are in London.
There's a significant number of global firms that have I think, almost the privilege of being listed in the UK, and with that comes, I think, very high-end corporate governance, certain, I think, well-respected accounting regimes. In other words, factors which are pretty sacrosanct in terms of the underwriting process. Yeah.
Yeah.
And in that way, I think London kind of punches above its weight.
Yeah. Now we know there's a huge debate, certainly in the UK. There is, I know, around Europe about passive management. azValor is very much an active house, and I know you talk a lot about active share and high active share.
Yeah.
What's your sort of perspective on all of that?
It's been an issue that's bedeviled a lot of value managers in recent years. The shift away from active towards passive has created a lot of price-insensitive buying, particularly for the large mega-cap companies within the U.S. and other indices. As a byproduct of that, there's been less research, less focus, and perhaps more misvaluations or mispricings associated with smaller middle-market securities that are out of favor or perhaps not in the index. As you say, azValor currently has, I believe, 99 to 100% active share in its international portfolio, which is highly unusual at the moment.
Just explain that active share point.
It's just the percentage of exposure within the portfolio that's not in the index.
Sure.
So these are securities that are, I would characterize as kind of orphan in nature, and thus the underwriting process is incredibly idiosyncratic. And by that, it means it's much more to do with the specific company, and you won't necessarily be buoyed by passive flows.
Yeah.
The hurdles associated with that are in an environment of increasing passive versus active share. You may underperform or experience bouts of volatility. But if we ever inflect towards a regime where active takes the baton, I think the rewards will be commensurate with taking that kind of risk.
I guess the converse of that, the flip side, passive management, is that when you go down that route, you're investing in the good companies, obviously, that come good, but also the bad companies.
There's that. I think that it creates environments where you have correlation between a lot of different securities because of the flow nature of the buying and the price insensitive nature of the buying. I think there's also areas we can exploit, for example, where companies are eschewed or thrown out of an index, and that creates a lot of unjust forced selling activity. And so in that vein, we always focus on areas of the market that we feel are being forced anything, forced bought or forced sold, because that's where you might find the biggest differential between price and value, which is the heart of what we do. Quality
is obviously important. When people buy things, they want a quality product. does that apply in your case?
I think it's a very subjective term. I've heard that term more and more. It's not a term I heard that often in the early parts of my career, and no one can really define it. Sometimes it's defined as perpetually earning high ROICs or high compounding characteristics within the balance sheet. And I appreciate the theory behind it, but a lot of so-called high-quality or compounding companies actually don't compound. It's just that there's a veneer of being, if you will, low volatility or stable businesses, and as a consequence, they've been bid up for bad reasons. And so we probably avoid the securities and rather focus our efforts on securities that are maybe a little bit more risky in perception, but have great margin of safety because of the low valuation at which we buy them.
This then brings you back to research and the nature of the research, and back to being able to extend your reach within Europe.
Yeah,
across Europe.
There's a big part of what we do is to focus on primary research, which is effectively sole source. We're not spoon-fed research. We don't rely on broker research reports. And the rigorous and I think forensic nature of the process here, again, gives us conviction that we can buy and add to positions on drawdowns, which I think is a fundamental tenet of good value investing.
So over the past 6 months, I don't want you to name names in terms of companies that you're looking at necessarily. Are there any sectors that are looking attractive at the moment from the azValor perspective?
Maybe answering that question the other way around, what's not attractive? To do with passive investing, we recently tallied the market capitalization of the FANG Man, the top 7 tech companies, and they total over $4 trillion in market value. And when you look at the sum total of market capitalization for all the gold miners in the world today, you're looking at, I think the number was about 150 billion. So there's a radical difference between the two. And so what we're trying to do is focus in areas of the markets where you have less take-up of value, industries that have less take-up of value on a view that perhaps they're overlooked and have more room to grow than the more popular space, which of course, are both tech and perceived defensive companies.
Sure. Madrid today.
Yes.
What attracts you to Madrid?
It's a lovely city, great climate. I think Madrid is, I don't know the city as well as I should. I'm exploring it, learning about it. I come here monthly, and so we, in the same way that people from Madrid come to visit me in London or visit the office in London. There's a good number of companies in Iberia that are, I think, overlooked as well, and there's some products that are actually destined, or the architecture of those products is to actually mine those opportunities, like the azValor Iberia Fund.
Michael Alsalem, thank you very much.
Thank you.